weekend edition of your Spider ETF wrap-up, and this with your weekly charts. It is for Sunday, the 21st of August, 2022, about 6:25 p.m. Central Time. So it's a rough week. You've got the FOMC meeting. No, you got Jackson Hole taking place. It just is important. Now you get all the central bankers together. FOMC meeting is the 20th and 21st. The reason it's on my mind is because whatever Fed Chair Powell says on Friday morning at 9 o'clock Central Time, that's when he gives his speech, he's probably going to say he's data dependent. The Fed is determined to lasso and take down inflation. Their goal is still the 2% target. I doubt he'll deviate, and I doubt you'll be able to get him to say if he's going to a 50 or 75 point move in September. Why? Because they're data dependent. He's made that clear. We get jobs data and CPI before the next FOMC meeting, which for all purposes is a month from now. Lots of data, but those are the two numbers that'll really set the tone. Will we get the 528,000 jobs revised? It was such an outlandish number. I would wonder about that. CPI was down, a half a percentage point. Can it slip that or more? That'll be interesting. If you had both of the revision, didn't get as many jobs, new jobs and a revision, and you took a CPI down, I think the argument would be for 50 basis points. If the jobs number stays anything near that 528 and CPI down another half a percent, no more than that, I think you're at 75 basis points. That's where I think the argument's going to center between it. We'll see just what happens. So let's take a look. Freeport. Now, interesting things are going on. If you look at copper futures, they're trying to turn up. And the reason is that China has decided to make a move. You know, the People's Party's coming up, and President Xi of China has blown his economy out the water. His policies are ridiculous on COVID. They make absolutely no sense by any world standard. He has shut down cities. He has taken a 5% GDP growth numbers to maybe to 3.5%. And he's also destroyed, in large part, his policies, tech sectors. He's hurt very badly the housing market. So what he's doing is he's first turning on the housing. People en masse stop paying mortgages. Now, it's different in China than it is in the United States. You go out and you buy a residence in China, before it's built, you start paying your mortgage. So the moment you sign that paper, you're paying. In the United States, you take ownership of a finished product of some type, be it land, an apartment, a home, whatever it is. Very big difference between the two and how that all works. So what he's done is they've instructed their regional banks to lax the policies. They want these properties to get built. They want people to pay their mortgages. Unfortunately, because of his policies, and I do blame the president for this, the economy has taken houses down. And even doing that, you've got to convince people that, hey, why should I pay on a mortgage of something that's fallen rather dramatically in price? That is the trick he's got to do. It goes in stages. First stages make the money easy. That gives copper a bid of sorts because more copper is going to be used in the wiring, the infrastructure, of getting the electricity to the properties, wherever they're at, inside the property, so on and so forth. Okay, so in Freeport, you have a pattern that is sort of saying this. You have a lower low, higher high. I was watching the president of BHP on last week, and he thinks that we will have an abundance of copper temporarily and then a shortage showing up as we get at the end of this year into next year. I can understand that just off what I'm trying to tell you. They've got to get this housing market fixed in China. You rallied back up into the 18-week moving average, couldn't quite make it to the 100-week, and you fell right back through the 200-week on Freeport. If you continue down, why not get to the 74.69 level, the lower Bollinger Band? Remember what Bollinger Bands are. A Bollinger Band is an algorithm that is designed to keep the market trading within the bands 95% of the time. Now, a lot depends if you've been going sideways or you're coming in and a narrow band trying to break out. These are rather wide bands, so I'm going to think the market's just going to be back and forth in these bands for a while, not really going anywhere. Momentum down. The bias is down since the market is under the 18-week average, but it's not a trend. You have a lower low and a higher high. In the bank stocks, I was telling traders during the week that I'm looking for them to have trouble right up here at the Bollinger Band. You have a situation where the momentum off the slow stochastics pointing up, but never embedded. If you don't know what embedded means, take my enhanced Bollinger Band course on our website, iraepstein.com, under education. Suffice to say, you have a lower low, higher high, and just like the market came off the lower bands, I'm expecting it to turn back down from the upper bands at this point. In the industrial sector, you have momentum pointing up. Again, no trend. What this market did is it held the challenge of the 200-week average, rallied up, faltered for 2 weeks at the 100-week, tried its surge to the upper band. It might still get there. Hard to tell. You can't tell on this chart that it's peaked or not. Could still get there, but I'd expect that to be the resistance. Now, the energy sector has come alive, and unless the market gets back underneath this low right here, let's see if I can get that number for you. I can. And that number is 70.69. Right through here, there's the number for you. Until that's taken out, the trend has turned back up. Higher lows, higher highs. The market will be looking for 90.52, and it's a blowout if you get back under 70.69. In SPY, I'm looking for a failure up here. I think the market on the daily charts has hit key resistance. You're close enough here for me to say, okay, I think you're going to see this market try to walk its way back down. In the gold market, the head problem, the headwind problem is this. It's the dollar. It's a question of what interest rates are going to do. If the dollar is going to keep getting strong, why would gold keep going up? It's too much of a headwind. Gold is priced universally across the world in U.S. dollars. If we see that the Fed can back off to 50 basis point increases, we don't know how many they'll do at 50 or 25 or whatever, but if they do, that'll be taken as a bit, the market can rally back up. If it rallies up, I look for resistance at 169.17 to 170.84. If it cannot take out this high, and that high is 157.98, you do have a target where you might be going to 157.64. It's not that far away. It's 60 cents, 70 cents. It's not like it's a big deal here. It's 162.72. So these numbers are within $1. I said 67, about $1 of each other. And from here, it's about a $5 break. So I can see that happening. There is no trend in GDX. You have on the weeklies a lower and low, higher high. You have a market that was embedded. Now, right this week here, you had a reading where it got to 22. It lost the embedded reading. If you take the course, you realize that the only time it can re-embed right away is the week after it was lost. And what did this market do? It's re-embedded itself, which means this was a trap for the bulls. The bears grabbed control. If they can start taking out the low, let's say, of 24.38, probably get into the 22.80 zone. Fast order. Capturing people that thought they had something. ARK had a beautiful run. We recognized it back here. I thought it would go up to the 18-week average of closes. It exceeded it, but now it's right back to it. Now the question is, what does it do from here? I think it and so many other parts of the market are going to wait now on the FOMC. No, on Jackson Hole. Yes, we'll worry about the FOMC in 30 days, but all the central bankers got to worry about it this week. Starting on Thursday, we'll get speeches, the keynote speech will begin, and we'll start the interviews on financial TV. You want to be glued to it. It's going to be market movers. Apple. So Apple's going to release on from the looks of it, the 7th, I believe it is. There's the date of the release. They're taking orders, as I understand it, on the 16th. It buys them another week in a quarter. So they'll probably have blowout earnings for the quarter that we're in now because of the new phone and that extra week. Yet, I think that at the upper Bollinger Band, via you're not embedded, I think the smart money's come out of the market. Do they have to take it all off? I don't know. The way I teach charting, yeah, you do. You take off your position. In Tesla, the trend is higher lows, higher highs. Momentum's still up, bias up. As long as you don't get back underneath right here, the lows of the week before, and we'll get to it right here for you, which was 838.06. The target could be 985.94. So we'll be watching to see what that does. But if you take that out, then I think you're going to get back into the 791, 765 level. Twitter, I'm still of the opinion that Musk has got to buy Twitter. I haven't changed my opinion. For the week, it lost 27 cents. But I was telling people down here that I thought the market was reasonable. I even picked up some, not very much, just throwaway money, as I call it. And we'll see if it can get up there. I'm still looking for the $50 area. I still think this is a lot of noise. I don't think his case is going to be very good for him not to buy it either, from everything that I've read in the news so far. TLT, sideways action, caught in narrow Bollinger Bands. I see no trend to trade off of that. Excuse me. So we finished up that part. You know, one of the things that I tell traders that they should do is always look to see what the futures are doing for you. And one of the ways you do that is in my morning update. So we offer a combo where you get information, buy and sell ideas and all the SPDR ETF, and I tie it together with the discount on futures. Why? SPY, DIA, QQQ, TLT, GLD, they're all based on futures contracts. So know what the futures are doing. I put out that video at first thing in the morning at 5:30. I start recording it. And then at 9 a.m. this Central Time, I start recording the SPDR ETF. I do it that way for a reason. A lot of the key economic data comes out by 9 o'clock in the morning Central Time. I want the market to absorb that, and I want the first half hour of algorithm trading to hit the market. Options, whatever it is, get it out of the way, and then we take a fresh look at the markets at that point. I find this, for me, works very well in making the explanations, market recommendations, buy here, sell there. If you'd like to learn more about it, it's very simple. Just follow them right here. Take your cursor, move it up, give it a click up there. You'll see an icon. It'll take you right to all the information on these combo offers that I put out. I'm Ira Epstein. You have a great rest of the weekend, and I'll see you all tomorrow.